Hi, this is Roger Balzer. Welcome to our Thursday video. Our title for this week is What a Difference a Week or Two Makes. Over the past couple of weeks, the major indices managed to rally to new highs. And in the case of the S&P 500, the index was able to break through notable resistance that had formed on the chart in the 30-20 area, which was tested on 3 occasions between July and September. Finally, on October 24th, the S&P was able to break through that resistance level with a move to 30-30, and the index has since rallied. The breakouts in the major indices come at a time when we've been seeing notable improvement from our equity risk indicators like the bullish percent charts, as well as in the midst of moving into the seasonally strong 6-month period in the market. Speaking of the bullish percent charts, the New York Stock Exchange bullish percent has returned to what we call bull confirmed status at 52%. This means that a majority of the stocks on the New York Stock Exchange are on buy signals today, and the chart is on the verge of exceeding the July high as there has been broader participation during this rally from some of the laggard areas in the market like small caps and value stocks. Further, from a relative strength point of view, U.S. equity remains the number one ranked asset class in Dolly. And what is perhaps more interesting is that U.S. equity has expanded its lead over the course of the past couple of weeks. U.S. equity has actually gained 8 signals over the past 2 weeks, while cash has lost 7, as charts like the S&P 500 versus the money market have returned to relative strength buy signals. While this does not guarantee that we will see a strong equity market over the next few months, the reversals up from some of these indicators have provided evidence that new demand is coming back into the market on the heels of entering the seasonally strong period in the markets. Over the past week, we've seen the SPDR S&P 500 Equity Trust, the Invesco S&P 500 Top 50 ETFs, the Invesco QQQ Trust, and the SPDR Dow Jones Industrial Average ETF Trust DIA, each better their respective all-time highs. SPY has moved above 305, marking the 3rd consecutive buy signal on the chart and a new high, while XLG has printed at 220. Additionally, the QQQs broke through significant resistance at 194 last week before pushing higher above 200. The 3rd consecutive buy signal and a new high water mark. Each of these large cap focused funds are trading in positive trends and remain on point and figure buy signals. From the current levels, initial support is offered at 285 for SPY, 255 for DIA, 196 for XLG, and 182 for the Qs. Although mid caps and small caps continue to trade just off their respective all-time highs, both were able to break through significant overhead resistance with Tuesday's market action. IJH moved to 200, marking the 2nd consecutive buy signal on the chart. At this time, it sits about 3% off its all-time high from August of 2018, and it's about 53% overbought, making new positions welcome here. It recently experienced also a flip to both positive and weekly and monthly momentum, both of which suggest the potential for higher prices. IJH, which is the mid-cap area, has initial support offered at 186 and resistance at 205. It also broke 82 during Tuesday's session, making a new 52-week high. With this recent move, it's about 11% off its all-time high from August of 2018. It's also recently flipped positive weekly and monthly momentum. From here, it has support at 75, while overhead resistance sits at around 90. Turning to international markets, both EEM and EFA returned to an overall positive trend within a day of each other. Since that time, we've seen both developing and emerging markets move higher. Today, EEM sits just a couple of boxes away from matching its 52-week high. It's 86% overbought at current levels and remains about 20% off its recent high at 75, a level it reached back in January of 2018. EEM's all-time high dates back to 2007. At that time, it was 86. From current levels, initial support is at 40.5, and I'll be monitoring EEM strength moving forward. Turning to EFA, the action this month, it printed a new 52-week high above 68. In addition, it sits a little over 10% off its recent high that was reached back in January of 2017. Although its all-time high was printed back in October of 07 at 86, the weight of the evidence is generally positive for EFA. Fund's 86% overbought also, and with this in mind, I'd suggest that if you're looking to initiate new positions, wait for a potential pullback or for price normalizations. From current levels, initial support is at 63, while the bullish support line sits at 61. If you have any questions, thoughts, or concerns, please reach out to me at either the email or 440-610-3012. Look forward to talking to you in a week or two. Make it a great week.